So this morning I was watching a video. The video was entitled 3 Strategies to Avoid Higher Rate Stamp Duty Land Tax, or SDLT as it's currently referred to. Now, one of the strategies was around splitting the purchase into smaller units. Now, I trained as an accountant many years ago, and one of the things I do know about SDLT, as it now is known, is that it has an anti-provision piece around the using of linked transactions, and it actually is called linked transactions anti-avoidance. So what I thought I would do is this piece, I will go through the scenario that was presented this morning in this video and say why I think you need to be very careful about this strategy. Stamp duty land tax linked transactions. So let's go back to where the additional surcharge came in. In 2014, George Osborne, in his infinite wisdom as the incumbent Chancellor of Exchequer, introduced this surcharge. And the justification for introducing this surcharge was to allow properties that were being hoovered up, I suppose, by private sector landlords to become more readily available to the first-time buyers and those at the lower end of the market. In order to do this, what he did was he introduced a surcharge on the stamp duty land tax, in that if a person was buying a property that was not their principal dwelling, or it was being bought through a company, then it would be subject to this higher rate stamp duty land tax charge. The land tax charge was 3%. So let's see what it looks like if you're an ordinary individual. The thresholds as of May 19 are up to 125,000 is 0, 125,000 to 250,000 is 2%, the next 675,000 or 250,000 to 925,000 is 5%, then 925,000 to 1.5 million is 10%, and any remaining value above 1.5 million is taxed at 12%. Following the introduction of this piece of legislation, if you were buying a second property, or you were buying a buy-to-let property or through a limited entity, those values go up by 3%. So the previous 0 rate band goes up to 3%. The band from 125,000 to 250 goes to 5%. From 250,000 to 925,000 goes to 8%. 925 to 1.5 million goes to 13%. And above 1.5 million goes to 15%. As you can see, a significant hike in the percentage that you will pay for stamp duty land tax. Now, going back to the video that I saw this morning, the suggestion was using a property of value 500,000, was that if you were to buy this property and it fell into either the second property rate, the company rate, or the buy-to-let rate, you would incur stamp duty at the following rate. So the first 125,000 would be taxed at 3,750. The next would be 6,250. The final 250,000 would be taxed at 8% and would equate to £20,000, making the total stamp duty land tax payable on this transaction of £30,000. Okay, so that was the basic premise of the argument this morning. Now, what the individual said was, the way stamp duty land tax is charged is based on the number of dwellings, or the dwelling, the taxation, or the legal definition of a dwelling. Okay, and that legal definition is defined in the Finance Act 2003. And I will quickly read what the legal definition of a dwelling is. A dwelling will, as a minimum, contain facilities for personal hygiene, the consumption of food and drink, the storage of personal belongings, and a place for an individual to rest and sleep, which is the definition of a dwelling. Now, if the property of 500,000 was split into smaller units, so it could be an HMO, could be individual flats, whatever it happens to be, then each dwelling would be taxed individually. Now, he used the assumption that there would be 4 dwellings in this particular property, each worth approximately 125,000, and if you taxed each one individually, you end up with a stamp duty calculation that looks like this. Dwelling 1 is taxed at 3%, as is dwelling 2, as is dwelling 3, as is dwelling 4. All these will encounter a charge of 3,750, which equates to a total payable of 15,000, which, as you can see, was considerably cheaper than the previous slide, which said 30,000. So now I've gone through the maths of how the calculations work. I'll now talk through where this potentially has a pitfall. Now, in the stamp duty legislation, there is a provision for something called linked transactions. It's effectively a piece of anti-avoidance legislation that will stop you splitting a transaction up into discrete packets to ensure that you pay tax at a lower rate. Now, it has been around for a number of years, and basically what the legislation says, that if a series of transactions can be linked together, as in a good example of this would be a single vendor selling to a single purchaser, the same transaction in properties or dwellings in the same physical residence, that could be called a linked transaction. In which case, the legislation provides that the value of each individual deal is added together to form the base value for the stamp duty land tax calculation. What does that mean in essence? That basically means that instead of being able to split the transactions up into dwelling 1, dwelling 2, dwelling 3, dwelling 4 and treat each one as a 3% stamp duty land tax rate, what you would effectively do is you would add up the value of each property. So in this case, the value would be 500, and then you would do the land tax calculation the same way as you do a single property of value 500,000. So that would be your calculation. That's effectively what the linked transaction legislation means. Now, if you were to buy a property where you had 4 individual dwellings, but they were all owned by 4 individual vendors, then that would potentially not fall part of this linked transaction anti-avoidance piece, because each transaction is independently being made with you. It's not being made by one vendor and one purchaser. So in essence, the warning here is that if you were to do this sort of transaction, then the revenue would probably look very closely at the transaction and what you were trying to achieve as a whole, rather than as individual single transactions. The other thing they look at is they also look at transactions over a time series. So if you were to buy property 1 from the vendor and then wait a few months and buy property 2 from the vendor and then wait for dwelling 1, dwelling 2, dwelling 3, the revenue may look at that and say, actually, you intended to buy all 3 at the same time or all 4 at the same time, and therefore this falls under this linked transactions anti-avoidance piece of legislation. So what I would say is, if you're going to start down and you're going to buy properties like this, multiple dwellings within a single with a single building, or another style of transaction that would be very similar to this, get your professional advisors involved early, because they may be able to structure the deal in such a way that you don't fall foul of this piece of legislation. But doing what was suggested in the video I watched this morning, I feel definitely would make you fall foul of this legislation. Remember, the contents of the video you've just watched does not constitute advice. It's my opinion and my reading of the subject matter that I've been discussing. If you like what you heard, of course, feel free to subscribe. Somewhere, either here or here, will be a subscription button. Click the subscription button and you'll be notified when videos are posted to the channel. Somewhere here or here will also be recent videos from the channel and maybe other videos relating to this subject matter. I look forward to you subscribing and joining me on my journey and your journey as an accidental landlord.